Ladies and gentlemen, we're going to be talking about Bitcoin, an advanced 21st century form of money, and how it relates to the Stone Age money from the 14th and 15th century, gold, silver, and then some kind of a money that doesn't belong to any time period, a ghost money that we've seen humans turn to time and time again whenever there's a dollar shortage. And there's no better person to talk to about these sort of things than Jeff Snider. But before we do, ladies and gentlemen, did you know that, yes, you're watching this show most likely, but that you can also listen to it? Yes, we are available on podcast. And many people think, well, I could be watching it, but you could be doing something more productive. You could be listening and doing something productive, something like exercising, perhaps getting your pump on at the gym, doing hot yoga, and if you are, send pictures, or running. Now, when you're running, you could be thinking about how to improve yourself, your society, your family. What difference can you make? How can you improve the world, your nation, your church, or religion of what kind? Or you could listen to this show. Now, I know what decision I've made, and I hope you make that same decision. You can just go to any of your favorite podcast hosts at Verbal, Apple, Deezer, iHeart, TuneIn, Castro, Google, Spotify, Pandora, Breaker, Castbox, Podbean, Stitcher, Player FM, Podchaser, Pocket Cast, SoundCloud, Listen Notes, Amazon Music, and Podcast Addict to listen to this show. Jeff Snider, head of global research for Alhambra Partners, you were recently at the George Gammon Spectacular in Miami, which followed the Bitcoin Super Show, also in Miami. And it's like Latin America is leading the way for this cryptocurrency right now, right? They had that conference. Then we hear about El Salvador. But you know, Jeff, in your article, I learned something that is not in the mainstream press that led perhaps to El Salvador making this decision. Where shall we begin, Jeff?
Well, I think, first of all, there's sort of as you're alluding to here, there's a lot of confusion about what El Salvador did, even in the Bitcoin community, if you can call it a community. I mean, it's not a monolithic community by any stretch of the imagination. You've got Bitcoin maximalists, you got Bitcoiners who take Bitcoin as sort of a religion. You got all sort. I mean, there's a wide variety of opinions in the Bitcoin community, which is a good thing. But across that wide variety of opinions, there's sort of a, I don't want to say confusion, but there's a little bit of angst about, it sounds like what El Salvador did is exactly what Bitcoiners have been preaching since the very beginning, right? Here we have a sovereign nation accepting a crypto form of currency, and what Bitcoiners would tell you is the primo top level. I mean, it doesn't get any better than this crypto form of currency, and it's everything they've been talking about, almost everything. Now, most Bitcoiners will tell you is that the reason Bitcoin is going to win in the end is because the dollar is toast. The Fed print money, go burr meme, the reckless money printing QEs, dollars going straight into the toilet. So the two things are, that's the Bitcoin maximalist position, those two things. Dollars done, Fed screwed it up, printed too much money, Bitcoin wins and takes the day. That's not what's going on in El Salvador. Actually, completely contrary to that, El Salvador is embracing Bitcoin not because they're ditching the dollar over fears of money printing, but because they're looking for a solution to the actual dollar problem, which is not Fed money printing. So that's sort of, oh yeah, this is good, El Salvador is embracing Bitcoin, but they're not doing it for the reasons we thought.
That's right. It wasn't as if El Salvador had been for years the leading proponent or some sort of instrumental force in the community, and therefore they make this announcement as a perfectly natural evolution of their involvement over many years. It was just sort of out of the blue, but not quite out of the blue.
But it wasn't out of the blue, right? Because just 3 months before they embraced Bitcoin, what were they doing? In early March, they were knocking on the door in Washington at the IMF saying, hey, we need $1 billion bailout, which for El Salvador, that's an enormous bailout. I mean, that's a huge thing. For them to go to Washington and say, I need $1 billion from the IMF, there's your first clue.
Okay, they asked for $1 billion, but really, what the problem was is that there's not enough dollars, not dollars, euro dollars, the real global reserve currency flowing through El Salvador. Isn't that right, Jeff? And so, Jeff, what is a reserve?
Dollars, right. They don't even have their own currency. Well, they do have their own currency called the Colon, which wasn't it wasn't dropped. They stopped printing it 20 years ago. I mean, the central bank doesn't print any more banknotes and coins. So, I mean, you could still theoretically transact in their local currency, but they adopted the dollar on January 1st of 2001. Rearranged everything because at that time, everybody was doing it in some form or another, as we just talked about in the previous segment with China even. Everybody dollarized their economies. And El Salvador took it to the extreme where they said, we don't even need our own local currency. We'll just use U.S. dollars because they're plentiful. They're everywhere. We find them everywhere. We need them anyway because it's a global reserve currency, and we're not going to be able to trade with anybody without dollars. So why not, they're available here, they're available everywhere else around the world. So why not just local currency, domestic currency is a hassle. We'll just use all these dollars. They're plentiful, they're everywhere. So you can already see, if you believe that dollars will always be plentiful, you can't foresee any problem anytime, anywhere. But as we talk about, quite a bit on this show, ever since around, say 2011, and then especially 2014 for many emerging market economies, especially those in South America and Central America, that was their worst nightmare. The thing that they thought would never happen, dollars would always be plentiful, suddenly they were not. In El Salvador's case, you can look at any number of ways. I mean, they do have a central bank and they do have a store of foreign reserves. So they do have U.S. dollar reserves, never really that much, only a few $1 billion. But yet the trajectory of that follows everything else. They built up reserves as dollars became plentiful in the euro-dollar mania period. And then that growth started to taper off, and then you get to 2014-15, and suddenly we've got reversals where U.S. dollar reserves in El Salvador suddenly drain. And then over the last couple of years, 2017 and 2018, despite globally synchronized growth and reflation, they didn't really have an increase in reserves. Then in 2019, they stopped reporting the reserve numbers to the IMF entirely, which is sort of another one of those clues that goes off in your head thinking they're not having, their currency is the U.S. dollar. They may be having more problems than they seem to be indicating publicly. So then you fast forward, we've got COVID, we've got the global recession, and all of a sudden in October of 2020, suddenly, seemingly out of nowhere, their official reserve dollars completely, just the level just plummets. And ironically, that's during the period when everybody thought QE, money printing, Bitcoin going crazy because the Fed's printing too much money, dollars crashing. And here's El Salvador thinking, where did all the dollars go? They just disappeared.
And I've pulled up a graph here, and Jeff, there's a dash line. So the full block, the area graph, that's their reserves. And then the dash line is sort of an early warning indicator. Do not drop below this. This is bad news. And they did drop below it, right?
Yeah, that's their what the IMF calls the predetermined short-term net drains, which are, El Salvador officially or in some capacity owes U.S. dollars because they borrowed them on the euro-dollar market or in euro bonds or something. So they report to the IMF that, yeah, we owe dollars to everybody else around the world too. We don't just have dollars in our possession, we actually owe them elsewhere. And this is a short-term net drain, which is an important term too, because it means within 1 year, we expect this amount of dollars to have to go out of El Salvador. If they don't go out of El Salvador, we're into Argentina situation, which is, we all know, is extremely bad in U.S. dollar markets. So by March and April of 2021, this year, the level of U.S. dollar reserves officially in El Salvador fell below that mark, which meant that absent any kind of IMF rescue or some other form of rescue or some other form of money being able to pay, they were cooked. Their goose was cooked. They didn't have enough dollars to pay what they had already borrowed and was due within a year. They were screwed. And that was March, April, May of 2021.
Ecuador, in just the exact same time as El Salvador did this, they had to dollarize as well, but that was for different reasons. Their economy was disintegrating. And so they were looking to it to stabilize their economy. And I can see why they did it. And El Salvador, I can also see why they did it, as you explained. But this isn't the first time we have seen this mistake. Time and time again, for 200 years, we've seen cycles of globalization, and the same story plays out every single time. Back when the United States was an emerging market, you see advanced economy money centers have a surplus of money. They send it overseas. Something goes wrong in the advanced economy money center. It's not the emerging market that trips a wire. It's something in the advanced economies, London, Paris, Vienna. They say, you know, something's not right. Let's pull our money back. And they withdraw it. And that's happened time and time again, at least 6, 7 times over the last 200 years. And so, but that's just the last 200 years, the modern economy. If we go back in time, when we did in episode 79, part 3 in early June, we talked about how something similar happened in the 14th century, ghost money, how there was a bullion famine in Europe. And so what did enterprising individuals do? In the absence of sufficient access to acceptable money, clever private participants will do whatever they have to in order to continue conducting commerce as best they might. That's really the point for money. It's not itself wealth, rather a tool that a free market capitalist system might better create true wealth in the form of sustainable commerce. And here we are again. El Salvador's looking to Bitcoin as a ghost money way.
Yeah, it really is. Cryptocurrencies are a form of ledger money in the exact same method as this ghost money that showed up in the 14th and 15th century, which is simply, in the absence of bullion, hard currency, they decided, well, we'll just keep a common ledger and write down who owes what based on what they created these ideal forms of money, like an ideal form of pound sterling or Flemish silver, and said this is how we're going to price goods based on this ideal currency, and we're going to keep track of who owes what on this ledger that we'll all keep together. And what is crypto? I mean, what is blockchain other than a distributed ledger? That's exactly the same thing. And I think what's going on, especially in Bitcoin and other places in the crypto space, is this misconception. People have this idea that cryptocurrencies are there and they've come about and they've proliferated and succeeded because of money printing. Dollar's going to crash, and they pile into these currencies, buy them up because they're trying to protect themselves and use crypto as a store of wealth. When in reality, it's this ghost money. The reason crypto is proliferating, come about, and really had success is because it's filling a very, very different role. And that different role is elasticity, money shortage. The Fed isn't printing money, which is exactly the problem. We see the Fed doing these QEs because the system is short of money. The QEs are a Fed response, and a very poor and ineffective one, to this monetary shortage. And in the modern 21st century, here we have people all over the world, including now at least one government, that's saying, we have a dollar problem. We can't get enough currency. We're going to turn to other forms of currency to try to create some form of to get some elasticity, so that our economy doesn't completely go into the toilet. It's bad enough as it is. We'd like to have our monetary problem, which is not too much money or fear of a dollar crashing. It's too little dollars. We can't get enough of them. We need to try something else because nothing else seems to be working. And that's the consistent case here, as I explained in that earlier article, and we talked about on that earlier episode. The eurodollar itself is a form of ghost money. It's a ledger. It's a distributed ledger. The difference here is that it's a private distributed ledger. It's a ledger that's distributed only amongst global banks, and therefore it's not as widely distributed as it is as a blockchain or decentralized as blockchain and cryptocurrencies are. But these are all the same types of things. And the eurodollar arose in the middle 1950s and proliferated in the 1960s because of the same money problem, the same monetary shortage, which was in the form of Triffin's paradox back then, which was the Bretton Woods gold exchange standard, incompatible with the monetary needs of a growing globalized economy. So we have bullion famine in the 14th, 15th century leading to ledger money, money of account as it's called, or whatever you want to call it, decentralized ledger money, ghost money. You have the 50s and 60s. You've got Triffin's paradox of the real constraints of Bretton Woods leading to the Eurodollar system. Again, ghost money, money of account, ledger system. And now we have, since August of 2007, we have a Eurodollar famine. We have a dollar shortage, not too much, a dollar shortage. And what do we see? Same exact thing. Ledger money, distributed technology, all of these other things, ghost money, money of account, whatever you want to call it. So crypto is very modern in how it's, the technology involved and how it actually works, but the concept behind it is centuries old. And really that's the problem with Bitcoin, and I think a lot of people who are investing in it and piling it, speculating in it, is they have the wrong idea about it. Their idea is 180 degrees opposite of what the people who are actually developing these cryptocurrencies are doing. The evolution of crypto is being driven not by money printing, but by lack of money printing. The opportunity for digital currency is because of this dollar shortage, the need for ledger money and elasticity being created because central banks are so ineffective and inept. So you have most of the public or whoever's investing in Bitcoin, they're doing it for all the wrong reasons, while the success and evolution of cryptocurrencies are for very, very different reasons, completely different purposes. And that's where we get this disconnect. And I think that's where this disconnect is created now, two bubbles in crypto. The first one back in 2017, and then of course beginning last October, which is an even bigger one. And now we're seeing the same exact thing. Now that it looks like everybody goes into the cryptocurrency because the dollar's going to crash. The price of Bitcoin goes through the roof, goes parabolic. And then after a while, people realize, wait a minute, the dollar's not crashing. In fact, we're seeing warning signs of deflation and dollar strength. And everybody piles out of, not everybody, but the speculators, the people who are buying Bitcoin and crypto for the wrong reasons, they pile out of it, and suddenly the bubble collapsed. But those who are using those who are on the deeper level, fundamental level, using digital currencies, they're not doing it because of the same thing. They're not doing it because they believe the Fed's printing money or printing excessive amounts of money. It's because the opportunity exists because of this pre-existing dollar short, this Eurodollar famine, this historical, as you would see, you might say, morphology. We're into another pattern here where we have monetary shortage and human ingenuity meeting that shortage, because money isn't the goal here. Commerce is the goal. Money is a tool to accomplish commerce. And if there's a shortage of money, damn it, what you're going to find is humans becoming very creative. And crypto is a very, very creative, innovative, and I think ultimately long-run successful solution to the monetary problem that nobody really understands.
Let me just add a quick footnote. People who are new to the show, they're hearing dollar shortage from you over and over, and this may confound them. Just a very quick footnote. The vast majority of money created for today's world economy is created out of thin air by private banks in the form of credit. Overwhelming vast majority, and that's been the case for 70 years. And it grew at an exponential pace up until August of 2007, and ever since then, their balance sheets, bank balance sheets, have essentially gone sideways. That's the dollar shortage. Or if it isn't sideways, it's modestly higher, which is insufficient to what we've been accustomed to. Jeff, is there any final word that you wanted to give the audience before we call it a wrap?
Just to, just to wrap up, final thought, that El Salvador, rather than confounding, and look, we're trying to help crypto. I mean, we're fans of cryptocurrency here. We're not bashing Bitcoin by any means.
Levered.
Exactly. No, okay. I'm not buying cryptocurrency at these prices, and that's what I'm trying to say. Is I'm trying to tell people that, look, you need to divorce yourself from what's driving people into these crypto bubbles, which is the wrong idea about the monetary system. They believe the Fed has printed excessive money, dollars going to zero. That's not the case. It's not the case. And if you want to make it the case to the exclusion of all the mountains of evidence otherwise, that's where you get into the religion of some of these things. And it's not just cryptocurrency. There's certain segments of the gold market and gold proponents too, that they take gold as religion, and the Fed's printing money. It has to be that way, and how can it be any other way? So what we're trying to do is say, look, crypto as an idea has a place, has an absolute place in the monetary system, in the monetary hierarchy, because of a dollar shortage that won't go away. The dollar shortage, this Eurodollar famine, has opened the door for cryptocurrencies to take over the role of elasticity, because governments don't know what the hell's going on. The Federal Reserve doesn't. I mean, Jay Powell just figured out this thing about collateral. I mean, they're so far behind the times. By the time they catch up, it could be that cryptocurrencies have taken over. But it's not because they're printing money. It's because they don't print money, and they don't know how to print money. So what we're saying here is, and El Salvador is a perfect anecdote. Let's not get carried away. It's just a small anecdote, but it is a perfect anecdote that puts all of these pieces in the correct order. El Salvador has a dollar shortage problem that they're trying to work through by using a form of private ledger money in exactly the way private ledger money has been used throughout history. So dollar shortage opens the door for other forms of money, which over time tend to succeed. And that's what we're looking at. So if you're piling in the crypto thinking that the dollar is crashing and the Fed's printing money, I think you're going to be really disappointed. If you take the longer run view of crypto and what really has potential here, erasing or at least alleviating dollar shortage, I think you'll be much happier, much better, much more satisfied with the entire space.
Beautifully stated, Jeff. I'm going to ask the advertising team to put those laser eyes on your Twitter profile. All right, Jeff, I'll talk to you again next week.
All right, take care, Emil. Thanks.